Hello, Maverick, and welcome out to your daily currency recap. This is Songit here, and here we are wrapping up the day. It's September the 30th. It's a Tuesday, and we are also wrapping up our month as well. For September has been a very good month, and I'm very happy to see that, traders were able to take advantage, and, some of the traders had their best month so far for this year. So great job, but this is where time to wrap up the month and now focus on the next month, the October. So let's get into it. Let's take a look at how things have been moving today in the markets, take a look at what's happening on the news front, take a look at currency baskets, and then we'll take a look at some possible setups ahead. Let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
So jumping into the market analysis, let's just take a look at the news of the day and take a look at the numbers. As you can see that the markets overall remains bullish. And one of the things that we are seeing that we are kind of up against is that government shutdown deadline, which is tonight. So usually we could see some disruption. If you look back in time, there's been fewer, we kind of come across this whole, this government shutdown. Sometime we avert it, sometime we go through it. But again, you can look at the history. The last one we had, was only 3 days from December 2022 of 2024 last year. And then we also had December 22 in 2018, and that lasted till the January 25th. And that was actually the longest one. And then after that, you can go back to 2013 where, we had the shutdown that lasted for 16 days. So this shutdown can really be disruptive, especially for economic data, because, these government bodies, so all non-essential workers can be furloughed. And this is where the Fed could be flying in the dark, because then if the data is not getting reported, and if these economic reports get pushed, and what happens to the upcoming Fed meeting? So there's definitely these nuances that you have to be kind of watch out for. Well, we don't know if that's going to go through, and if it does go through, how long does it go through? Now, those are the things that we have to really watch out for. So, we have seen things get averted, just at the deadline. Who knows? But just keep a close eye on that. Maybe that will cause some volatility in the markets. But right now, I'm not really seeing any of that. Now, outside of this news front, we have the economic data we have from RBA, and they actually made no change, which was expected. We weren't expecting any change from RBA, and then the Aussie did strengthen. So Aussie kind of resumed its uptrend. The overall market stays positive, which is also positive for some of the risk-on currencies as well. So that's really what we have moving so far this week. Now, when we take a look at the numbers, you'll notice that a lot of the numbers are kind of, in the down low. Like they're, in the middle here, that's where we're seeing most of the sideways move. Aussie, of course, is doing the best with 0.43%. Kiwi continues to be one of the weakest currency and only up 0.12%. And you can see there's a big divergence taking place between the Aussie and the Kiwi. And as the dollar pulled back, we are seeing the yen strengthen on that. So you can see that so far, it hasn't really been a great week. And we kind of anticipate that. We saw that last week where first couple of days of the week were more on the down low. And as we got more data, we start to see things pick up, and dollar really had a big move. Now, something we're going to discuss when we look at the charts, is that moving the dollar down? Is that something going to be, pick up? And those are the levels that we'll watch out for. But so far, it's been not a great trading week. But then I expect that as we are at the end of the month, at the end of the quarter, books get closed, we're just seeing things kind of fly into that end, and then we'll see how things pick up as we start the new month. Now, when we take a look at outside of that, let's just take a look at the equity markets. You can see the S&P up slightly. We're seeing the World Stock Index up slightly. Cryptos are down. We talked about cryptos, that they don't look the best here, especially after having that big outperformance during the summer. They all seems to be under pressure, except the Bitcoin, which did not take part in that rally in the summertime. So really, the best ones are getting hurt the most. Gold continues to be the big play here, continues to push higher, and then oil actually did push lower. So overall, you can see percentage-wise, both in the equity markets and in the currency markets, things that are moving in a smaller range. And remember, when you want to have a big trades working out, like we need to see big percentage moves. So when there's smaller percentage moves, it's not really enough meat on the bone to really take advantage of that move. Now, as you can see that Bitcoin is holding it steady here, but with Bitcoin Cash is down, Ethereum down the most, and then here we are with the Litecoin. So all the best currencies are now underperforming here. And I kind of find that surprising here because, we talk about risk on and risk off, and we talk about how some certain cryptos are acting as more as a risk on cryptos or currencies, but we're not really seeing that right now because overall market's staying positive, but cryptos are lagging. So that's just not a good sign for any crypto bulls there. Now, here we are with the outlook. What's changed? Well, here's the chart here. And remember I said, this is an uptrend. This uptrend's not going to turn lower until we really break below the 20 to 50. Last week, we got towards this area. And then here we are getting closer towards the upper end of it. So question is, do we break to new highs here? Is this the one that's just going to take us higher and have a big breakout, or do we stall at this resistance level? And I think that's one thing that I'll be watching very closely, especially as we go from a third quarter to the fourth quarter, and now any rotation take place. So these are the things that as a trader you're always watching out for. At the same time, we're looking for confirmation. We are getting closer towards the upper end, and if that breaks out, we probably have a continuation of that risk on move. So something we'll continue watching out for. But again, there's these government shutdown, there's economic data. There's a lot in the mix where you just need to be a bit more all hands on deck here. Now, when we take a look at the economic reports, you can see that this is a busy week with the economic data, but something we have to kind of reevaluate and see if any of these numbers get pushed, especially that jobs report that we get out of US on Friday, which is really a highly anticipated report that everyone is just kind of watching here. So that's one we'll be paying close attention to. Tomorrow morning we have this ADP numbers, and we're looking at the ISM and manufacturing PMI numbers. So those are the ones to pay close attention to. But like I said, I don't know yet, if any of this data will get delayed with the shutdown happening overnight. We had a Joel's job opening today, and you can see that number was not really as concerning. If you look at the last few weeks, these numbers were actually declining quite a bit. Seems to be stabilizing a little bit here. So we'll kind of have to wait and see what happens. But as you can see, the most of the data coming out this week is out of the U.S. and that's the biggest mover that we were anticipating. But with this shutdown here, we'll see if there's any of that get delayed. We have CPI coming out of Switzerland. I think that's just not a worthy event to kind of stay up for that early in the morning. But outside of that, not a whole lot going on. So as far as the velocity goes, you can see it's kind of all over the place here. The biggest one really that highlights here is the Aussie outperformance. Aussie's doing the best. And what's doing the worst? Kiwi. Kiwi is still, despite of that rally, Kiwi is still underperforming. But you can see that all the currencies that were doing well last week, and they start to pull back here as well. So let's just take a look at charts and look at some possible trades and see what we can find.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let's just start with our top-down analysis here. We already looked at the markets. We know markets are bullish. Here we are. You can see all day it's been a bullish price action. Now, is the bond yields moving? So let's just say a 10-year bond yields, see what that's doing here. And you can see that bond yields are not doing much here either. So let's go down to the dollar. So remember, dollar is one of the currencies that I've been very actively trading for the last 2 weeks, and we caught a very nice little bottom over here, and this is the move that really made our month, and this is a good testament to quality over quantity of trades, because all you need is 1 or 2 good trading weeks that could really make a big impact on your results. So you can see that this one, we had a big move here. And then where we are getting a pullback. So the question I have here is this a bull pullback to buy into? Or is this a rejection and we're probably going to fall below it? And I think this is where you need to sort of draw some trend lines and see if these support levels hold. Because if those levels hold, then we know that we probably see maybe a resumption here. But right now, based on this chart, we were making lower highs with a lower low. That's the pattern. Now we just made a higher high with a higher low here. So I still do like the dollar to the upside, especially once this shutdowns get pushed back or we get over that. And then we probably see a bit more clarity. And as we get the data, the employment data, remember, if the data is not that bad, some of the expectation for rate cut will diminish, which will help the US dollar overall. So that's the one thing I'm paying close attention to. But right now, as you can see, we are in a bull pullback format, and this is where you want to steer clear till you really see things turning around. And then which time frame do you see things turning around? This is where you can go down to a 4-hour chart. From a daily to 4-hour chart, you can see that we are still below the exponential moving average. So the pressure still remains to the downside. Here's the hourly chart. You can see that we haven't really broken out on any of the, even as we go in the lower time frame, we haven't really broken out. So I think dollar kind of holding it steady. We'll see what happens, and then I'll be paying close attention to it tomorrow. So if the dollar is kind of the dumps here, you can see that what's really benefiting from it is the Japanese yen. And I talked about yen, that this is a very important level of support. As you can see that it just bounced off that support again. So do I love it as a buy? No. Do I love it as a short? Right now, not so much. I will have to kind of wait and see which way it does really tell me. Here's the daily chart, and you can see we are, at this point, I would rather look at some ranges to see if that rejects that level, but it's a little sideways play here. Now, when we go into other currencies, Swiss franc is pulling back a little bit. This is the level of support, but you can see it's still above the 20 to 50. Shorter term seems to be pulling back. And again, remember, this Swiss franc could be sensitive to risk trends. So should we see any pullbacks in the markets? I think Swiss franc likely to do well. But based on the 4-hour chart, it's kind of making a bit of a reversal in the short term, where it just made a lower low and with a bit of a lower high. I think not really a good long, but not really a great short either. Now, when I go into the euro, what do I see in the euro? Remember, I talked about this prior breakup point. The euro is just hovering over that level. So at this point, if this falls below it, I would rather look at something. It goes back down in the range here. So not the best looking price action. As you can see, it's a bit of a consolidation. If I go into the pound, what I see, consolidation. Not my favorite price action here. what was happening with the CAD here. As you can see, CAD has definitely more ranges to it lately with some nice little pushes up. But overall, you can see it's still in a little downtrend here. So CAD doesn't really look good over here. So the only chart that as you go through all these baskets, look at this little breakout happening on the Aussie basket. So here we are with that resistance here. We'll see where it closes. Remember, this is the level of resistance. If it falls below it, that could be a bit of a false breakout and we could fall right back lower here. If it stays or close above towards the high, we could see a bit of a continuation here. So overall, you can see on a 4-hour chart, we are taking a pause here. So it doesn't mean it's a time to be short. We just, it's just gathering energy. It's taking a bit of a consolidation here. So if you're looking for breakouts, then you need to see further breakouts. We need to see it breaks out the prior high. Getting a bit of a reversal candle here or a bit of a tail on this candle. So I would rather wait and see how this candle closes. But remember, risk trends. If anything happens, anything changes with the risk trends, we have to pivot with the markets. If the market stays positive, I think the Aussie still looks like the best shot to be. Because, when you take a look at its closest counterpart, which is the Kiwi, as you can see, Kiwi made a big break of the support and continues to stay on the downside here. This is a very weak price action. I mean, you can see overall basis. I mean, this looks like a very anemic bear rally to me here. So if you're looking for a continuation in that Kiwi here, look for this level to be broken. This is where set up some alerts, notify, say, okay, tell me if it's breaking lower, because in that case, I think some of the Kiwi currency pairs will rather break out as well. So based on this relative strength and weakness, let's take a look at the first obvious one, which is the Aussie Kiwi. So as you can see, that Aussie Kiwi has been on an epic run here. I mean, take a look at where we are, and this is the level that we always like to watch. But you can see whenever you make a breakthrough from these key levels, that's really where the big move has come. So, now the question comes is that what's the next level of resistance? As you can see that it's sitting at about 114.11. As I go back in time, 2022, that was the last time we has a massive run over here. And you can see it kind of topped around that 114.55 here. So keep that in mind because, usually we know or we've seen that these levels could be a good profit-taking area. So sometimes everything looks good, but then traders start to take some profits there. If this holds, let me just take you out in the longer term, just to give you a little perspective here. So this goes back to, here we are back in like 2014, 2015. So if you think that this is going to break out further, you're talking about a 10-year high that it needs to break out of. So as you can see that from a risk to reward perspective, I wouldn't really love to get long here. But if it does clear that level, if it does what it did over here, where it pushes higher, make a bit of a base and go higher, I think that's when okay, there's a massive, major move is on the way. But take a look at 10-year move here. I would be very surprised. And usually, whenever I am up against these resistance levels, I'm very cautious there. So, everything is looking pretty good, but see how this Aussie Kiwi does when it gets to that resistance level. Now, let's take a look at some of the other pairs. So some of the other pairs that looks decent, dollar, let's go into the dollar here. So the question is, should we take advantage of this pullback? Is the dollar long still look good over here? And what pairs we'll be looking at? So, here's the first one. Dollar CAD, we already seen CAD kind of showing some weakness. This still looks like a bull pullback to me. So here we are, 139.47 down to 139 here. Look for this consolidation phase and see which way it breaks out. So far, this is the one that's held in a lot better. Other dollar pairs, they have taken some steeper pullbacks. So like dollar yen, remember we talked about a massive breakout above that 148. And this thing has really fallen below the 1, 2, 3 candles. But look where we are. We are right at those moving averages. So this is where I don't really love this as a short. If this settles over here and start to bounce, might be worth taking a look at from a risk to reward perspective and put our stop right below it. But yeah, this dollar move, it looks just like a pullback to me here in the short term. Now, any other pairs that looks the decent here? So Kiwi dollar. So if this dollar move, as you can see with this turnaround that happened in the dollar, I mean, take a look at Kiwi. I mean, this thing still looks weak here. So what's the level? I mean, this is the level 0.5818 or 20. Remember, this is the level where it broke the first. So we got a nice little break, getting a little bit of rally. So if I really have to go long the dollar, I think Kiwi dollar still looks the best here on the short side, especially if it rejects this level here. Now, Kiwi again is a clear short here. Is there anything else that we can find? Let's go into the euro dollar. You can see there's just some congestion here, but a lot of these dollar pairs, you'll notice that you're seeing a very similar thing. You're getting 1, 2, 3, but this best price action kind of looks weak here. Look at these wicks that we're getting on these candles here. So for euro dollar, I will be looking at dollar 16.50 area for this to break, and then you can see it's really at the midpoint from the resistance to the support. And we'll see which way it goes, but it still looks like a little bit of rally to me here. Any other pairs that we can find? I mean, let's take a look at dollar Swiss franc. Yeah, very similar thing. Remember, we just ran up against these resistance and it's just pulling back. So, like I said, I'm pretty clear. I mean, this dollar move has pulled back, but I'm not really wanting to short it here. I mean, I think this looks like a nice little healthy pullback here. If the dollar stabilizes and we see a resumption of that trend, again, I think I'm pretty clear on what pairs that we're looking at. Now, if that doesn't happen, I think then you just have to go back and see, okay, what else is moving the best here, from a risk to reward perspective. And, there are times where if things don't look clear, it's okay to steer clear. But when you see things clearly, just the way we saw the dollar move in the last 2-3 weeks, and we really took advantage of it. Is this a pullback that's going to reverse? And again, then that's the next move. They're going to take advantage of it. So I still like that, but I'm very being patient here and watching out to give me a signal if it's going to move in that direction. So let's just wrap things up over here. So economic data might get delayed with this shutdown. So keep a close eye on that. Keep a close eye on the headlines, that's supposed to happen, at midnight tonight. So see if there's anything that comes through last minute. And if it doesn't, then, we have to kind of wait and see if there's any delay to these economic data. But outside of that, like I said, pay attention to relative strength of weakness. Aussie looks the best. Kiwi looks the worst. And then dollar is in a pullback, which, we're trying to see if that has any follow through or any reversal to it after that 3-day pullback. So that's the game plan here. Till then, take care. Happy trading.